Alright guys, welcome back to this channel. It's the second day of the week. Alright, the week just started and we are already in profit. Alright, now I made promise to myself that I'm going to be 100% transparent making this video for you guys. 100% transparent. So if I made any loss, I'm going to put it out there so you see what I did wrong and what went wrong on the trade, and you try not to apply that while trading. All right, and if I make profit and I show you what I do that made me enter for that good trade, what I saw and how it played out, all right, then you can apply the same thing while you are trading or while you are analyzing your charts. So you see that it's just very simple. All right, it's just very simple. There is nothing complicated here. I use the same strategy, which is market mechanic, and I think it has been long I talked about market mechanic, and it's my strategy. All right, strategy that has been proven to be true. All right, a lot of back test has gone on, a lot of front test and all that. All right, so if you don't know anything about market mechanic is just the combination of the most profitable parts of price action, the most profitable parts of supply and demand concepts, liquidity concepts, and the most profitable part of the most profitable part of ICT concepts. All right, so it's just the combination of supply and demand, liquidity concept, price action, and market structure, and also your order block. All right, so these are the things I trade with, and if you have been watching my video, you see that I'm not talking something different out of all these things. I trade with these things, and all my videos are almost the same thing. All the things I look out for while trading are almost the same thing. All right, just that we discover things in the market every day, and if I discover anything in the market, I'm going to put it out there for you guys to see it. All right, I'm also a student of the market. Everyone is a student of the market. There is no mentor. Everyone is learning from the market because the market is changing over time. All right, so let me show you what happened at this trade. But first, I made a video previously talking about a successful trade, but then again I was just entering on a particular trade when I made that video, and I showed you guys and I say if this trade play out, I'm going to put it out there, and if this trade did not play out, I'm also going to put it out there. But guess what? Let me show you guys the trade. That's Euro USD. Euro USD. Yeah, let me show you guys the trade. All right, this is the trade. The price takes us out at stop loss. All right, the price hits my stop loss. Now look at what I did on this trade. If you have been watching my video, you will see that it's still the same thing. All right, it's still the same thing. But then again, look at price gave us a shift of structure, a candlestick closing above this high, and then a retracement and an engulfing candlestick. But you know what happened? What I did wrong is that I entered this trade on Friday. I was done trading for the week. I was done trading for the week, and I did my market structure analysis that Friday in the morning, because I always wake up early in the morning, and I analyzed my chart. I did everything. Then I didn't have anything like this. I was not getting any market structure shift like this until it was afternoon that day, that Friday, and I was so stubborn to enter for the trade. I don't know. It's Friday. I'm not supposed to be trading Friday immediately, even after the London session has done opening. Like, it's the middle of the day, I'm still trading. It's not right. I'm like, yeah, I understand. This is like 100% my fault. All right, I take responsibilities of it. I shouldn't be trading on Friday. I know I might just enter for a scalp trade, a quick scalp trade, and take profit immediately during the London section. Immediately the London session opens, but I didn't get any market structure shift then. So I entered a little bit too late, which is at the middle of the day, and I should not be trading on Friday also. I don't know if you're understanding me. I'm sounding complicated, but then again, it is what it is. I made loss, but then again, guess what? Monday, it's Tuesday. now. All right, and I already made two profits. I already made back this money that I lose here times 3, not even times 3, times 4 self, even more than. All right, so you see that risk management is very important. It's not by how many times you are right in the market. The question is, how much money do you make when you are right, and how much money do you lose when you are wrong? Or rather, how much money do you make while you are wrong? Because you can still make money while you are wrong by breaking even on every single trade. But then again, this trade is not giving me anything that will make me break even on this trade, because price has not moved up to 50% of my profits. I would have break even. But then again, it is what it is. All right, it is what it is, and we already made back the money times 4, even more than, on Euro JPY. JP. Yeah, right here. So this is the trade I'm about to show you guys how it played out. All right, I think I've done a market analysis on this trade before, but then again, let me just show you what I did briefly. All right, so this was a trade. As you can see, price was clearly bearish. Let me go to the 1 hour time frame. As you can see here, price is clearly bearish, and here there's a demand zone here. You can see that I spotted it out clearly. There's a demand zone here, and price tapped into it the first time, went up, and now we are here again. Now, what will you say is your daily bias? Or if we go to the daily time frame, we're definitely going to talk about this trend here. What will you say? What is the order flow of the market currently? Looking at this, you say the market is bearish, right? Yeah, the market is bearish. So while the market is bearish, we are expecting price to tap into our demand zone, which we had from the higher time frame. This is our demand zone. Clearly, price has tapped into it because we are targeting this point now. Price has tapped into it clearly. Now let's go down to the lower time frame. Let's see what price is doing. I'm going to give you a secret on this stance. Yeah. Now, coming to the lower time frame, this is what we have here. Now let me show you guys something. Anytime you have price doing something like this, anytime you have price doing something like this, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, and then have a shift of structure, expect a retracement. After that retracement, if you want to trade something like this, let's say you want to trade something upward, because we had a shift of structure now, and you want to trade bullish, this is what you should do. You want to trade this bullish trend, because after that retracement, price is going to go up. You should be targeting this high. Sorry. Yeah. This high. You should be targeting this high here. Let me spot it out. Right here. Why? You know why? Because this lower high and this lower low, lower low, lower high, lower low, lower high that I spotted here, that I just analyzed here, is an internal structure. I keep saying this, like, this is an internal structure, and if you are trading within this range, if you are trading within this high, within this high and this low here, this low here, if you are trading within that high and this low here, your profit, your take profit should not be above this point, because this is internal structure. We only had a shift of structure internally. All right, we only have an internal shift of structure. For us to shift totally bullish, then you can be targeting. Let me remove all these things. I don't want to have a messy chart. All right, give me a little bit of your time. All right, so for us to target something higher, let's go to the 1 hour time frame. For us to target this high here, or rather, yeah, this high here, first of all, for us to target this high here or this high here, we need to see a shift of structure above this external high. I don't know if you understand. We need to see a shift of structure above this external high here. When we have that shift of structure, we wait for a retracement also, then we can target this high or this high. I don't know if you are getting me. And also, for us to target this high here, this high here, this high here, we need to see a shift of structure above this high here, above this high here. Then we can target something at this top, or rather something above, yeah, something above or right above this point. So I don't know if you're understanding me. So you target or you set your TP at the next swing high. Don't do something outside that range you are trading. Like I have here, I have to make sure I make you guys understand this thing, because I'm made to analyze trade in a way that even a 5-year-old can understand. All right, so look at this. If you are targeting something at this range, like I said, above this high and this low, your take profit should not be above this high. Or let's say you are selling, this is a supply zone and price tapped into it, your take profit should not be below this point. Your take profit should not be below this point. So you see what I'm saying? Take profit at the next swing high or the next swing low. All right, don't stop expecting too much from the market, because the market can just go to your direction, close to your TP, and retrace and stop you out. So you see what I'm saying? So there is another way you can make this profitable for you. You can enter for one trade and set your TP at the next swing high, and you enter for the next trade, or you enter 2 times and set that other TP at the higher time frame swing high. Right, you can also do that. All right, but then again, remember to break even, because price can keep going up and then hit that second TP. So you might not you can't predict what the market will do. All right, price can just keep going up and hit the other TP. So you see, it's good also to enter for a second trade and target something higher, but then again, manage and protect your downside. All right, I don't know if you're understanding me now. Let me show you what I did on this trade. I already did my market structure analysis today, and price is now giving me a clear shift of structure. I'm seeing a clear shift of structure. I don't know if you guys are seeing it. And I'm waiting for price to retrace. Then I can trade. Now, this was what I did right here. As you can see, the market is clearly bearish. Let me zoom in. The market is clearly bearish. Lower low, lower high, lower low, lower high, and lower low here. So this is our last lower low here, and just like I spotted out, right here is our last lower high. Let me take this out. It's our last lower high here, because price did something like this. Price did something like this: lower low, lower high, lower low, lower high, and then a lower low. I don't know if you see this. So you see, this is it. And then we had a shift of structure right here. This is a clear shift of structure. All right, so after that shift of structure, price got to this point, and I know for a fact that after a shift of structure, there's definitely going to be a retracement. All right, and I wouldn't really advise beginners to enter for this trade. For you to enter for this type of trade, you have to understand candlestick confirmation first. All right, I did a video before, but I think it's an old video. I'm going to do another video talking about candlestick, so you guys should understand something. All right, so price shifted structure with a lot of liquidity. You can see this multiple bullish candlestick piercing upward with a lot of liquidity, and then price got to this point and gave us a rejection candlestick. You can see this upper wick candlestick piercing up. You see that this is a rejection candlestick and an engulfing candlestick. All right, give us an engulfing candlestick. Then I entered a little bit too late, but then again, I entered after seeing multiple red candlestick. First of all, what you should check out for is that we are having this multiple bullish candlestick to the upside. You should be sensitive immediately price the color of the candlestick changes. You should be sensitive and notice something. Immediately you have that change in color of the candlestick, your mind should tell you that something is about to happen. Then I saw the multiple bearish candlestick, and I know for a fact that, man, the sellers are in the market already. I don't need the soothsayer to tell me that. I already knew. All right, and I targeted something, just one history, I think so. I just targeted one history on this trade, and my TP was somewhere at this point, and watched it played out perfectly well. All right, my TP is somewhere, I think somewhere at this point. All right, so this was the trade. Now this is my daily bias for today, what I'm expecting. Price has gave us a shift of structure, remember, and then price has retraced after the shift of structure, and we already traded that. Now price is at our 15-minute time frame now, giving us another shift of structure. I don't know if you are seeing this, giving us another shift of structure. Now I'll wait for a clean retracement before I can trade bullish. And now if I'm trading bullish, I will be targeting something at this high here. First of all, I will target 1:3, and I will enter for another trade targeting something at this high here. So this is what I'm expecting for today. All right, so I hope you've learned something, and I hope you guys are targeting something like this too, because if you are watching me, you are supposed to understand something like this. This is a clear shift of structure. We had a shift of structure, and now on the lower time frame another shift of structure. It's a good thing. And anytime, let me tell you guys, anytime you're having a perfect structure shift and a perfect market structure like this, be very, very careful. There's always the liquidity sweep, there's always the manipulation. Smart money already know that. A lot of retail traders knew this. Then there will be a manipulation, so be very, very careful. All right, don't enter too early and don't enter too late. Make sure you watch my video so that you can be extremely careful while trading and be sensitive to notice any smart move of the smart money. All right, and follow their blueprints. All right, so I hope you have understand something from this video, and happy trading day and happy trading week.